This conference will now be recorded.
Good evening, ladies and gentlemen. It's Clueless Trading Frank. It's approximately 9:49 p.m. I truly do apologize for the slight delay. I was supposed to start at 8:30. I'll tell you the reason in a couple of minutes. It's actually a good reason. It is 9:49 p.m. Eastern Standard Time on the beautiful waterfront here in Jersey City, overlooking New York. It's absolutely gorgeous out there. My dogs don't want to come in the house. They're sitting on the balconies, looking out on the water. You know, what can I say? I should be doing the webinar directly from there, from the waterfront, but I don't have this set up yet. I should do it off my iPhones, you know, next time. Do a podcast. How about that? It is 9:49 p.m., June 7th, 2020. God bless you all. Welcome. This session will be recorded. This is our weekend strategic webinar to set people up for the following week, for the following couple of weeks, to read a couple of charts and try to figure out what's going on and what will happen over the coming days, if not tomorrow. Session will be recorded, uploaded to the YouTube channel on Clueless Trading a bit later tonight. And for newer members, keep in mind that the fastest upload happens on GoToMeeting, which is Citrix online. And then the minute it comes up, I put it on the Twitter feed. So you can just click that, listen to the recording at your own pleasure, and then not wait for the upload, which takes a little bit longer these days on Google because of whatever Google is doing. It takes a little bit longer than what I normally, it normally takes. So now you know all that stuff. Welcome. So the reason for my delay was I'm exhausted. I moved after the delivery almost 30 bags of mulch. Okay, so anyone who's got a beautiful garden and loves landscaping, not that I like doing that, but my wife loves doing that. It's big thing. There is we have 4 dogs, beautiful dogs, beautiful dogs. Anyone who wants to see our animals, all rescues. They're big into rescues, all right? We're big into rescuing traders, and we're big into rescuing dogs and cats. We have 3 of cats. Then just go to Instagram and at Polo the Toy Palm. My good friend here, Mike H., who is my dearest friend, knows very well, and he's a dog lover too. So anyone who wants ultimate loyalty, get a dog. You want to rescue a dog and save a life, rescue one. I know, rescue a cat. Makes you feel good. The ultimate stress relievers. You don't need Valium, you don't need Xanax, you don't need drugs. Just have some beautiful animals around you, so when you go to bed, they're all over you, and you wake up saying, thank God, thank God. Okay? Telling you, that's me. All right? That's the reason I am what I am. So yeah, almost 30 bags of mulch, and God knows how many expensive gravel and all that stuff that came. People working around, I'm helping out. So, hey, that's the reason why I was late. I do apologize. So, aside from that, let's get into the technicals and see what's going on. Right now, ladies and gentlemen, and we have a great crowd here. Hopefully that what I present tonight will be helpful to you guys. I try my best. Remember, every day, every couple of times a week that I get on these webinars, it is like acting on a stage, except this is real acting, right? This is money acting. So it's not like watching, some great Broadway show, whichever ones you like, and every day that you have to perform, except this one actually is performance to make money. So it is fun, but I got to deliver the goods. So I'm sure you guys all understand that. So saying all that, so what's happening right now? Right now, futures are up about 4. We were up 20 when Globex futures started. They start at 6 p.m. This is the E-minis/ES for new people, okay? This is the way you track the market when it starts on Sunday evening. This is when the Asian markets come into play. U.S. futures trade, kick in. Australia kicks in. China kicks in. Hong Kong kicks in. Dubai always kicks in because of time difference and all that stuff, but they're not that much relevant to our markets, even though they're some of the richest countries in the world. They are not that relevant to our markets, believe it or not. But it's the Chinese markets, the Hong Kong markets, Australian markets, not New Zealand. You know, we like New Zealand. We like beautiful sheep and great sweaters, but they're not that relevant. So saying it, E-minis, right? I'm just giving a little, apologize to the older members, but just giving a little rundown to newer members. Can everyone hear me?
Yes.
Yes.
Yep.
And then I'm gonna get into the little quiz that I put out there as I was rushing in with my doggies, and I had my iPhone, so it was just like one hand on the leashes, other hand just like putting out there, and I will let you know who the winners are on what they said. So on that little quiz about the E-minis and whether Dow Jones can come down to blah blah blah, which is very important. So the E-mini futures are what is the front line, right? That's a big word these days. The front line of the markets. The fastest, you know, there's a lot of people, not in my group, but other people who love trading currencies. I've never done that. I'm sure I could have learned that and been very good at it. Currencies, you know, a lot of people say, hey, trade currencies, you know, the pairs, the US dollar versus the Chinese yuan, or, you know, over the Japanese yen. Those are some of the fastest reactors. Second is obviously the E-mini futures, because I love stocks and I love markets, stock markets. So that's the reason I focus on this. So the E-mini futures kick off on Sunday at 6 p.m. So it's always curious to know, like, what's happening, like, boom, how are they going to open? Down 100? Are they, you know, are the S&P futures, which one S&P futures roughly, as I told you, is a factor of 6 to 8. I always take the higher factor. So if you fall 1 point on the S&P futures, then it is roughly 8 points on the Dow Jones Industrial Average. So it's always kind of fun and important to watch. To me, it's not fun. To me, I need to know, like, whoa, if futures are down a lot, like, how are we going to open tomorrow? Am I going to be down a lot at the open? And I'm going to be still, you know, delivering, starting off at 9:30 a.m. and or before to all my members. So yeah, to me, it's very, very important. Very, very important. So that's it. So the quiz that I put out there, all right, was I showed everybody, and I'm just, you know, I'm just telling you straight out. I don't care what trading platform you're trading on or what you're doing. You have to have investing.com on your iPhone or any other phone that you have. And you know what I'm going to say? If you have a Samsung, I don't call it a Samsung, I call it a Samdung. You know what dung is, right? It's called fertilizer. It's called cow shit. Oops, sorry. So if you have a Samsung, I know they're beautiful phones, you're not really supporting the US stock markets, all right? So let's support the US stock markets. iPhones are great. I have the XX Max. I want to get the newer ones coming up with the 5G. I want bigger screens. Samsung has beautiful screens. Oh my God, I even touched them, like, wow, this is great when I go to the store. But where are the apps? Apple, iPhones is not just an iPhone, as you all know. You enter a universe and of the iPhone world, all the apps, everything. I was a BlackBerry user for so many years. I was a late adopter to iPhone. Now, why did I leave BlackBerry? Unbelievable phones they used to make. The touchscreen was one of the last ones they made. I have every one of them. My wife said, what are you going to do? Why don't you like get rid of them? They're like sitting there in the stacks and thing. I said, honey, no, I'm going to put it in a museum, because BlackBerry was one of the finest companies in the world. They still are, but the app developers stopped supporting them. So I couldn't really run with it anymore, because I need my investment apps to run with it. So very simply, everybody, and I've said this many times and telling you guys again to help you, okay? Just sign up for investing.com. All you need to do is just sign up for free. Real-time alerts, very easy to see on the eye, investing.com. Okay, very easy to see on the eye. Look at this. This is what it looks like on your mobile device, whether it's a Samsung or an Android or any other phones that you're using, which you should never use, but and get an iPhone, you know, or your iPad. This is what it looks like. So why not? Because you have to have one platform, regardless of what you're trading on, which matches the charts that I put in. Because I put out my charts on 3 different chart platforms, right? Thinkorswim, Quad, which is the billions one that I talked about, right? Which runs off bar charts. And I use Warden 2000 once in a while. And but more importantly, investing.com. Now, let me ask you a quick question, guys, and please answer, you know, what you feel. Is it easy on the eye to see what you see?
Oh, yeah.
Right. So what is easier on the eye is going to make you a lot more money. Look, I can get really fancy, really complicated. I can get into the Darvas box. I can get into this, that, inside out, and show off my prowess about my knowledge about my business. But what's it going to do for you guys? Not much. You guys are going to be so frigging confused, it's not going to be fun. So investing.com, why not subscribe to it? And I pay an extra 26 bucks a year just so I don't get ads running off on the sides. So how many of you, after everything that I've said, I'm just asking, have an account with investing.com that I trade off big time, and I show my charts big time almost every day?
Yes, I have an account at investing.com.
Okay, anyone who else? Somebody, no, tell me, how about let's go off the virtual negative. Who does not have an investing.com basic account so they can follow my charts that make us a lot of money almost every single day, every single week, every single month?
Hey, Frank had said, I don't have one right now, but I'm going to get it in the morning.
And who is this?
Ed.
Yeah, so do it, Ed.
Yep.
Great.
Yep,
Who else
for sure.
who else doesn't have it?
I don't have it.
And who's I?
This is Habibi.
Okay, you're new, so I understand that. That's great. Who else? Come on, step up and tell me. Because every single thing that I'm drawing is going to make me money tomorrow. And if I was a futures trader right now, it would make me money right now. So who else doesn't have it? Come on, guys. Everyone else of you has it. Ray, you have investing.com, Redline, Simon, VMV, More Profits.
Yes, we do.
Paul, I'm not going to ask. He's got more
No,
other stuff.
I don't have it, Frank.
Boss, Aldi. Yes?
Sorry,
Yeah,
Frank,
I'll
I
have
just
it,
got
Frank.
in. What's the question?
Huh? The question is, who doesn't have it? Aside from the people who said, you know, 2 people
I
said,
have
yeah.
it, Frank.
Okay, good. Use this platform. They're actually European. I don't know exactly who they are, but they're damn good because it's free real-time stuff. You don't have to pay for it. And they're so easy on the eye. So that's one of the things that I want to impress upon all of you people before we get into everything is what's easy on the eye means it's going to be easy on your pockets.
I thought investing.com was based in India.
I'm not sure if they're Indian. I believe they're European, Mike. You might be right, though. You might be right. You know, you might be right. I haven't really looked into it, but investing.com, I believe, is European. They are either Ukrainian, who are some of the smartest, or because Ukraine is the most advanced internet online tech country in the world. Small country, very, very smart people. Very, very smart people. So I'm not quite sure. No, I don't think it's India. I don't think it's India. This fly chat that I use as a plugin for my members public chat room, they're India. Anytime I have a problem, I email, they're 24/7. They get back like right away. Hey, don't forget that Microsoft's biggest software development company division, aside from the US, is in India, South India. You know, well, look who runs Microsoft. He's South Indian. I mean, my God, these guys are so smart. It's not even funny. Maybe they don't eat meat. Maybe that's the problem. That's the good thing. I don't know. I'm a meat eater. They're all vegetarians, you know. But good people, not troublemakers, and very, very, very smart in math and all that good stuff. Okay. So let me see here. Yeah, Microsoft's guy is, Google guy is definitely South Indian. Satya Nadella, what a genius. These geniuses, man. Wish I was smart for a change, you know. But hey, you don't need to be smart in trading. You just need to ride the backs of the people who are smart, okay? So that's the way it is. You got to piggyback them. All right, ladies and gentlemen, now that we have all that put away, futures are only up $1.50. Wow, we gave back 20 handles. So what we're talking about was, I was mentioning when I showed the original chart that we opened up at, what was this? This was the 7th. Yeah, 7. So the high was 32.11. Can everyone see that? This is very important to us. And you see what's happening. Pull back 32.11. That was at 7:30. The markets, this gap open was at 6 p.m. Okay, at 6:15. We opened up at 32.03. Does everyone follow me? This is very important, guys. So, you know, please, because I don't have time to give you guys useless information. I can give you a lot of useless information because I have a lot of useless information on my head, okay? I can tell you that Kylie Jenner faked her numbers and now she's not a billionaire, and I can give you all that stuff, but that's not what we do at Clueless Day Trading, okay? Sometimes I do. Okay, so we gapped up here, then we shot up there to 32.11. What a beautiful move, right? From 31.88, I have my $1 calculator right here in front of my hand, which has served me very well for many years, to 32.11. So we were up, let me get my drawing pen and follow this very closely. So we were up 23 S&P points, ladies and gentlemen. That's a beauty. That's like, wow. So if you're a futures trader and you bought, when I said uptrend is intact, you know, on Friday, right after the market or at the market at the close, you'd be at 23 handles. Very sweet. You'd actually kept it. Very nice amount of money. Very nice amount of money. All right. And anyone can futures trade, by the way. And Thinkorswim has fantastic tutorials on that. I can teach you a little bit on that. I used to trade futures, and I'm going to go back to trading futures. And I always tell people that the reason I don't go back to it, because knowing what a gambler I am, not in Vegas, but in the markets, I'd be up like half the night just trading the markets. And then what's going to happen when the markets open? I'm going to be sleeping, and you guys would be like, what the hell's wrong? You know, where's this guy with his alerts and his charts and stuff? And then I'll be like, okay, you know, 3 p.m., I'm coming in. All right. So now I'm dead serious, you know, that's what happens. Futures traders can make a lot of money during the night before the market opens. I used to do that years ago before I started my service, honestly. And I said, shit, made a lot. What the hell, man? Get to bed. Walk the dogs, get to bed. Don't have a drink at night. Have one in the morning. I'm just kidding. But so it's, you know, it's just like that. But that's what we do. So 23 points is actually beautiful. So what happened? So since this time, watch carefully. Since we reached the 32.11 point, which is beyond what I thought the markets were going to go to short term, even though I said we can go to 32.60, which I think will happen, and I'll show you that. We dropped from 32.11 to right here, right now, right there. Okay, right there. Now this is a line which is a breakout level, and that breakout level was 31.83. 31.83. Now the chart that I showed that Simon answered, he was just off by 3 points, and my friend Ed answered very correctly. Was that it was on the off the daily charts. This is of the 15-minute charts. This is for traders. So this is a breakout level. You can see that. I want you guys to understand the candles. This is considered a breakout level right there, right there. Breakout 1, 2, 3 touch points. On a technical basis, anytime that you're drawing lines to measure the buy and the sell inflection points, you have to have almost at least 2, if not 3 touch points. This is 3 touch points. Do you guys see that? 1,
Yes.
2,
Yes.
3. And you got a 4th touch points where the market's bounced off on Friday. And here you have 2 touch points on the top. So, like I always say, and I say it again, and I did a quick Saturday morning. Was it today or yesterday? Yesterday, I believe. Now I lose track. With some new members, a bunch of them signed up. And where's Amin? He wrote a very nice note. He signed up big time, and he wrote a very nice note. You know, it was very kind of you that he thinks he's in the right place to learn not just about trading, about the markets and stuff. And hopefully I'll deliver that, Amin. Okay, and hopefully I'll deliver that. I'll certainly work with you closely. So bottom line is that. Bottom line is like it's all very, very mechanical. So 23 points, so we gave back that. So we dropped from 32.11 to 31.83. So let's do this, 32.11. We almost kissed. Is everyone following me so far?
Yes.
Yeah, I'm
Yeah.
just like being very technical here. Just, you know, just so you know, we're not like here talking about, we're going to talk about some of the other stuff in the market, what's going on and this and that, but I'm just being completely robotically chart wise right now. So we dropped down to 31.86. You see that? And we are creating a small hammer. That the support is the breakout level that I just showed you. That support is 31.83. Right now we dropped down to 31.80. I'll round off the numbers, 31.87. So if we drop, so we opened up, we ran up big, 32.12. I'm rounding off the numbers, minus 31.87 is 25. From here to here is 25 handles or 25 points that we gave up on the S&P 500 without breaking the support. We break the support as we're doing this webinar, we're going to go straight to my next line. These lines haven't been drawn tonight. They were drawn last week. We are going to drop very quickly to 31.69, or we're going to retest this very beautiful uptrend line. This is how you make money while you're trading stocks, options, whatever you're doing. Right there, we're going to test. Oh, this actually intersects these 2 lines, which is known as a consolidation channel or pullback level. Consolidation channel in simple words means people who bought well before, like we did, tend to take profits when markets move up like that. That's why I repeatedly said on Friday, and stay selective. Same things I said a couple of times. Sell full or partial profits. And if you do have great profits, walk away from the screen. Markets don't go up in a straight line. So if you have a lot of fat profits on gap opens and the job data and everything that we're going to talk about, And what the Trump administration did with the stimulus and everything is working beautifully, beautifully. Okay? And what the Federal Reserve did, Jerome Powell, was working beautifully. But it was the Federal Reserve with the Trump administration working jointly to push a huge amount of stimulus. That means big frigging money, $6 trillion plus, into the US economy as a cushion, is actually working. That's why we had, well, we'll talk about that. We had 2.5 million jobs hired back in May instead of losing 10 million in May. And that's why the markets were in a shock factor. And they were like, whoa, we can't believe this is happening. And they went nuts. And we ended up 833 points after almost going up 1,000 points. Yes or no, ladies and gentlemen?
Yes.
Exactly. Were you shocked? If anyone
yeah.
tells me, if
I
anyone
was.
says they were not, they're lying. I was.
Yep.
Exactly. And you know who really was? The big fat smart cats with $100 billion hedge funds and $30 billion hedge funds who did not even make one single fucking penny on Friday. You don't believe me? Read my article that I posted out there. That's coming from the media, not from me. And I've been talking about this for a while. They not only lost money on Friday because they're all frigging short. Remember, you know who Oscar Wilde was, right? One of his, okay, if you don't, if anyone doesn't know who Oscar Wilde was, he wasn't your buddy you went drinking with, you know. He was a legend. I'm not even gonna say who Oscar Wilde was if you guys don't know. He said a famous quote: "There are way too many educated derelicts in the world." You know what that means? Can somebody tell me what that means? Don't, not Mike H, please. What does "there are way too many educated derelicts in the world"? What does that mean? Guys, come on, come on, come on. You know.
I'm busy Googling it real quick.
Yeah, I know somebody's gonna Google it really quick, you know. One second, one of my dogs barking. Hold on. I might do that them in. Hold on. Sorry, guys, I don't want to get detracted. Yeah, sorry. One of my boys, my first baby, Romeo, he's like barking. He probably must have another dog. They were just trying to chat. What does it mean? There are way too many educated derelicts in the world.
Just means there's people out there that are full of hot air, and they, even though they're educated, it doesn't mean anything.
Yeah, you're kind of right. That means that really, like, you know, listen, a very educated professor at Harvard or Yale, does that make him or her a great trader? No. And that applies to all of you too. Okay? The real ballers who created the United States of America and every other great nation in the world were risk takers. So and the word for in trading is called analysis paralysis. You sit around analyzing everything, like all the merits of, like, oh, why should the stock go up? The fundamentals. You see those analysts out there, oh, everything was like, and are they making money? No. I'm not saying you got to be a stupid, like, you know, completely stupid, like, you know, drunk out of your mind type of trader either. But when you're too educated, you overanalyze things in life. You never take the risk you need to take to make it happen. So as a trader, this is the behavioral finance part of my business. As a trader, you gotta take the risk. And the reason I take the risk most of the times, and I lose sometimes, of course I do, but I make a lot more. on all those great trades that I presented to you guys, even in the short couple of weeks while the markets were down and then moving higher, is because of the charts, of the technical charts. If you are too much into a company's fundamentals and you think you're a big shot Wall Street analyst who have been dead wrong on the market for God knows how many years, even now, and analyzing every aspect of it, iPhone sales are going to be down, China stop, 400, 910,000 Apple stores closed, blah, blah, blah. They were all shocked. That's the reason why I told you guys to read that article about the V-shaped recovery that I talked about on my last webinar. It's even not a V-shaped recovery. As my friend Mike Harrington did the geometry, the angles with me, right? It's an almost an 80-degree angle down and a 45-degree angle up. People are so frigging scared. It's not a V-shaped recovery. So the word, please, these are not just things I'm just telling you to say, oh, I'm so smart. I'm not. Okay? But yes, I have a very high degree of command over the English language. An educated derelict, okay? The world is full of educated derelicts. That includes a lot of you too, who are very educated, and I am too. I have degrees from some of the finest schools in America. So is the fact that don't overthink something. If the chart and the technicals and other things put in place, put some money in. Any great business that was created with risk and, of course, a business plan and smartness. But you can be as smart as you want, but if you overanalyze things, you are going to make nothing. And that's the reason all the big shots who said we were going to be nothing in the last 3 weeks, they said that. They all came out and said that we're in a depression, blah, 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 are now sucking their little thumb and rushing into the market. And that's the reason why the markets are going higher. Do you guys understand that, which I've explained before?
Yep.
So stop being super educated that much. Stop over analyzing. And earnings report comes out and people go nuts. Oh, their earnings were down, blah, blah, blah. And you're like, well, what is that? This and that. You know, I gave up. I was on Wall Street for 14 years. We're in the portfolio management business. You know what portfolio management teams do? They analyze things to inside out. And I realized how stupid they were. And these are guys coming out of, you know, I did my MBA at Babson. That's as good as Harvard. If you know, their programs are incredible. We actually rated higher than Harvard 2 years in a row. And that's in Boston, by the way. Okay? So, real smart presentations, everything. Comes to actually making money, zilch, zero, nada. So yes, I don't want to get into too much, but that's the way it happens. So why these great fund managers all sidetrack and now partly rushing back into the market? And what about all those great fund managers who shorted the market to kingdom come? Not just in the United States, Europe too. They're dying. Okay, so that's the reality of US stock markets right now. Now, is the market going to keep on going higher and higher? No. I think we're reaching a level, we're going to look at that just in a couple of minutes, where it will take a week. We should, and I think we will, take a nice fat pullback. And we need that. So that's what the world is full of educated derelicts, okay? Gotta have cojones, and you gotta get into it. And especially for options traders, I'm looking for my daily chart. Especially for options traders, you guys gotta put money on the table and look at these charts and make money. Otherwise, you're just another loser, just sitting on the sidelines, looking at tactical traders making a crap load of money, putting out feedback that I put out there, and you're wondering, man, that really sucks, because the little voice in your head tells you you sucked because you were not there. So, like I said in my other webinars, how many times are you going to keep on saying that? So let's get in there, baby. All right. So the pullback on the initial quiz was, I have it on my iPhone that I put out there. Let me see here. Simon definitely steps up. You were off by 3 points, Simon, just so you know. It was 31.33. You said 31. 1 second.
31.30.
You said 31.30, but it was 31.33. You know what I'm saying?
Yeah.
Okay. Mike did correct me. It wasn't Oscar Wilde. I always thought it was Oscar Wilde. You were saying it was Calvin Coolidge. Okay, I'll take that. I'll take that. So you're off by 3 points, right?
Yeah, I bought it.
It doesn't matter. You still get the price. Ed was directly on the point. Ed, you still with us?
Yep, I'm here.
Okay, and you said 31.33. That's exactly what I had shown on the Investing.com chart, right?
Yes.
It was 31.33.22. So both of you get the next month free. All right, because you guys friggin' deserve it. Investing.com, very simple to read. So the first thing I looked at it, I said, okay, I'm starting to see a little pullback. So that was a major breakout, which I even didn't expect. It happened very quickly. So that's the pullback. Now, if we drop from the the level that we went up to, which was the high of the day. What was the high of the day? Yes. The high of the thing was 31, and everyone else can chip in, but 32.13 minus, gotta look at my iPhone, minus 31.33. So we had 32, 1 second. These things are very important. Some people are like, oh, what the hell is it, going on this for? Because this is what makes us money. Okay, 32.12 minus 31.33, which doesn't show up on the 15-minute chart. It's here. It's somewhere here, 31.33, right there, the gap fill, right there. See that? When the market actually took off at 8:30 in the morning on the jobs data on Friday. So before that, it was 31.34, so 31.33. Minus 31.33 is 79 points. Let me do this for you guys. From here to where the rally actually started around 8 in the morning on Friday, which caught all the shorts with their pants down or whatever they're wearing, skirts, I don't care. And then they got blasted. This is the scariest thing that can happen to you as a short trader. As a long trader, the scariest thing can happen to you are red candles. For a short trader, a green candle is a frigging nightmare. And for the hedge funds, they lost billions on Friday. Billions. Okay? And billions is on right now. Hopefully they got frigging screens that actually move numbers, like I said. All right? So this is the scariest thing. And they kept on getting squeezed. Bull flag, breakout. They're like, oh my God, what is going on? And then the market pulled back a little bit into what we call a consolidation channel. So 79 points from here to here times 8. This is what you guys were wrong on. Let's call it 80 points with a factor of 8, which is the higher factor, to see what the Dow Jones Industrial Average would do, because that's what 99% of people look at, is 640 points. So no one answered that correctly, right? You guys gave me a bunch of different answers on the chat room. 557, 563, 584. It's actually 640 points. Do you guys get that?
Yeah, got it.
Exactly. Remember, guys, for newer people, one S&P E-mini handle is a factor of 8 on the Dow Jones Industrial Average. But if you take a factor of 6, 80 times 6 is 480. But I like to take a higher factor, so that's 640. Does everyone understand what I'm talking about? This is technical stuff. You're when you enter my service, we're talking numbers, we're talking charts. Of course, we're talking some fundamentals. Do you guys understand what I'm talking about?
Yes. Yep.
Yeah.
And if anyone isn't, just ask me. You know, I'm here to explain that to you. Don't be shy. This is not a business of being shy. Okay, you want to be shy? Go on Oprah. You can be shy, and then she'll open you up, and then she'll say, "Okay, go to Dr. Phil. He'll fix your head straight." And then you're going to shoot yourself sometime. Okay, right. So one E-mini point, S&P futures point, or S&P point is roughly 8 on the Dow Jones Industrial Average. Very, very important to keep in mind, with a factor of 8. So if this is up 1, that means you're going to be up 8 on the Dow Jones Industrial Average. Very simple. All right. So saying all that, these are very important things. That's the reason why I was explaining this to you. So basically, when you look at this chart, which I'm going to be actively looking at tomorrow, we have a couple of major levels that we have to deal with. So one of the lines that I'm going to draw directly in front of you, and it's going to be a very busy week. It's going to be, we have a lot of social unrest. I'm not going to get into that stuff, you know, a lot of heavy duty stuff going on, political and everything. A lot of pressure on the current Trump administration. This is a democracy. There are going to be forces from both sides attacking each other. That's called a democracy, whether you like it or not. We're not a dictatorship. We're not a one-party rule. We have 2 major parties, Democrats and Republicans. Deal with it. All right? Deal with it. A lot of social unrest. Looks like the violence and the unruly violence has subsided quite a bit, which is good. We have corporate America stepping up at a level that I have never seen in my life. I'm not going to get into it, but don't forget what I say. America runs on business. The minute business falters, America falters. American business, in my opinion, is the finest institutions in the world. All of them, especially the big ones. Now, whether you like their politics or not is not my concern. My concern is, are they sustaining the growth of America? And they are. Because without American business, no political party would ever manage to run this country. Do you guys agree with me or not?
Absolutely.
Yeah, we're business people. We're stock traders, okay? We want to make money off the smartest guys who make money, so we buy their stocks. Why do we buy stocks? Because those guys are running companies so well, doing so great, you know, making $40 billion a year. So we want to make some money on their stocks because we know they go to work every day. And all of them are stepping up and voicing their opinions about what is happening in this situation. So I have to, whether one agrees or not, you have to listen to it, right? So this is a sea change. I am amazed, surprised, and all of you should take heed on that, all right? In the meantime, stock markets, boom, higher. All right, let me take this line out. So just want to keep you guys, you know, close. So this week we have a Fed meeting, I believe. This week we're going to look at the economic calendar in a second. It's going to be a busy week, but these are the levels that we need to follow. Let's say we didn't know anything about what's happening with the protests, with the situation in Minneapolis, with the unfortunate death of Mr. Floyd, and all the crazy stuff that happened after that, which I personally don't agree with. But hey, big stuff going on out there, guys. Big stuff. So let's say you didn't know anything about that. Let's say you lived in Mars, and you went up in SpaceX thanks to Elon Musk. Okay, and you didn't have any connection with Earth because we're a bunch of morons as humans on Earth. You want to follow these charts. Okay, so what is this chart telling me? Worst case scenario, and it can happen, ladies and gentlemen. Okay, we're going to come down and retest this. Do you see how symmetrical the move is? We were trading in a trading band since, yeah, I've shown this before, since the 3rd of June. Call it the beginning of June. Do you see what's going on? And that trading band, and Simon, you're very quick at this. I want you to tell me, trading band was 31.28 to 30.86. What is that? What is that in Dow Jones? Let's see, I'm doing it, you do it. Simon, you with me?
So that's about
What is the depth of this sideways trading range?
about 150.
Is it?
3128.
You might be right. I'm doing 3128 minus 3088. It's 40 points. Okay. Everyone
Okay.
go to everyone promise to go to Dollar General tomorrow or the $1 store and get one of those solar things. I have like HP, like 12Bs, like hardcore calculators. I use these 2 of them that I got for like $1 each years ago. These things never died. Maybe they get the solar power from my freaking screens because my screens don't see sunlight, okay? Other than what's coming out through my door in the back. 40 points, all right, guys? 40 points. So everyone get the dollar calculator, all right? They make you a lot of money. So best investment you make. 40 points. Is everyone with me? So what's 40 points times 8 in Dow Jones Industrial Average terms?
320.
320, exactly. This is how you dissect the market. This is when you don't run for diapers every time the market's down 100, like, oh my God, I need to get a new diaper. Okay. So you know what diapers mean, right? That's a synonym, just a figurative way of saying you just like losing your mind. So don't lose your mind. Don't get new diapers, all right? Just focus on new charts. So 320 points. So we traded in a 320 point Dow Jones range where the market and the media and all the other trading rooms and whatever you follow, they're all like, no, that's it. It's all over, blah, blah, blah. Nothing. It was a trading range. It was uncomfortable, especially as options traders, but it was a trading range. And that trading range ended on the 4th. Now I'm showing you the simple chart because I have a lot of other charts on my Twitter feed showing the VIX and everything saying that the uptrend is intact. Yes or no? I showed you the daily chart showing you that the uptrend was intact. It was a bull flag intact. Yes or no?
Yes.
Exactly. I don't want you to say yes because I asked you. Go look at it. I'm showing you the short-term fluctuations that make us feel uncomfortable. The short-term fluctuations mean what happens during the day. If tomorrow morning the markets open down 300 points, you're not going to be too feeling good because you have some long positions. Yes, right?
Yeah.
Yep.
Exactly. So same thing I feel. But what do I rely on? My charts. Not just a 15-minute chart, the daily chart, the VIX. Look at so many other things. Then I come out and say what I have to say. 90% of the time, it's a fact, I'm right on the dot. In fact, our biggest days are when the markets open way lower. Yes or no for people who actively trade with me?
Yep.
Exactly. But you have to position manage, meaning that you have to have some cash on the side. You can't have every single dollar that you have like invested. So you have nothing to act on the dollar cost averaging, i.e. buying low. Or you can sell something you bought on Friday and then move into something and then run with it. That's the reality of trading. And I know many of you know that, so I'm not going to do it. So 320 points. And then we said sayonara on the 5th, and boom. We came back, retested that. Anytime the breakout happens, ladies and gentlemen, anytime a range breakout happens, whether it's a stock or a market, it will inevitably, within the same day or by next day, come and retest to see if that breakout was real. How does the market know that breakout was real?
The breakout becomes support.
Yes, Mr. Hua. Simon, my boy, like it, man. Like the way your mind works. Yes, they want to come and retest and see if that resistance, previous resistance, was that support. Did you guys understand that part? It happens with stocks all the time. So if that support holds, like it did here and here, and this happened after hours, because futures have a lot of things happen in the futures market, so you got to track it sometime. You don't have to wake up at 4 in the morning like I do. My eyes just open up like, oh, where am I going for? One of my iPhones like, okay, where are we? I'm like, oh my god, it's 4, I'm going back to bed. All right, I don't get up on my computers, turn all my 14 screens on. I'm like, oh, what's going on? Where is everybody? No, I just check on my iPhone. So okay, tested the thing. Yes, Simon. What was support before, resistance before becomes support, and then right around 8 in the morning, this is what the markets did on Friday. What day was Friday? Friday was I'm losing track. Friday was the 5th. Okay, so Friday was the 5th, and then the jobs report, which shocked everybody. 2.5 million created. Of course, the Trump administration, and more importantly, hand in hand, Jerome Powell, a great patriot, our Federal Reserve governor. I used to always get very angry when Donald used to scream at him, try to bully him. Like, come on, man, give him a rest. He's far smarter than you. He knows what he's doing, and he did the right thing. Not just cut rates, huge stimulus, all the different tools. He's what you call a real player, okay? Not the politicians in the White House. The real player in the U.S. economy, the real baller, the real billion-dollar money rainmaker is Jerome Powell. Okay? The quiet guy who fumbles once in a while when he's talking, because he's talking to a world full of idiots, includes us. And the politicians don't even understand what the F he's talking about, because they're always looking at the poll numbers. Am I going to win Wisconsin? Am I going to win Michigan? Who the F cares? Who's going to win America? The people who really care about America. The Federal Reserve Bank of America, in my opinion, and American business. They are the two ultimate institutions who truly care about America. The politicians, they'll switch stripes and colors just to get a vote. And I don't give a flying F. Okay? And neither do you guys, honestly speaking, even though we have our political, biases. Do I think the Trump administration doing great thing for American business? Absolutely. Are they screwing up in certain fronts? Absolutely. Overall, they're doing a great job, in my opinion. Okay, let's move on. 320 points, gone. So now we have moved, we just went nuts, berserk, and I explained to you why. The CTA funds, the commodity trading accounts, the ones who are short, they're like, oh my God, what a nightmare. Market goes up 800, 900, almost 1,000 points. So as a trader, if you're not situated correctly here, it does become very difficult as an options trader, especially to buy into a surging market up 600, 700 points. Yes or no?
Yes.
Right.
Yes.
So what happens with me as a professional trader, I tend to sell the first major bump right as the market opens. 9:30 by 10 o'clock, I'm selling a bunch of stuff, leaving a little bit in there. And then I slap myself for not leaving all that because it goes higher. But who the heck cares? I just still had a great frigging day. But that is the problem. You cannot always chase 250-mile per hour bullet trains like they have in Tokyo and other parts of the world. And even the Acela goes really fast, right? From New York to Washington, 150 miles an hour. But our infrastructure so sucks that we need to have those bullet trains. Like Elon Musk wants to have those bullet tunnels, right? What's the tunnel called that he built? The test tunnel, Simon?
Boring?
Yeah, the
Boring
the boring tunnel. Exactly. Thank you. The boring tunnel. It ain't boring. You're gone. So that's what happens. It is difficult for us because that's why we always get situated when the markets are in the trading range and when it's not a good day and it's down. And I'm saying, okay, scale in, and then boom. So I tend to sell like 50 to 60 percentile higher, great profits, 100, 200. In the case of Boeing, 500, but I'm not necessarily there at the top. So I'm still selectively long, but my exposure to the market, as I mentioned previously, is less than what it was when it was at these levels. Now, right at these levels, when the markets are shooting higher, what is happening to the average investor out there or average trader out there who has bought in? How are they feeling? What do you think they're feeling?
Euphoria.
Yes, who said that?
I said euphoria.
I know. I don't know who I is.
Oh,
What's your
Ed.
name?
I'm sorry.
Ed?
Yep.
Yeah. So they're feeling good, which is good for the overall market. We all want to feel good in America. We want to feel good that this virus goes away for good. Futures are up 9. We're still doing good. But as a matter of technical discipline, I cannot be aggressively buying the market other than selective positions at these levels, even though my charts are showing that they want to go higher. And what is higher? Can somebody tell me, looking at this chart, what is the max upside that we can get to?
3230.
Yes, exactly. Exactimo, like we say, okay? Exactly. Right here. Because this purely from a technical level. Yes, 3230. So if we go up from 3195, let's call it 3200 to 3230, that's another 30 S&P handles, right? E-mini handles. What is that in Dow Jones terms? Dow Jones Industrial Average, guys.
240.
Thank you very much. So in my brain, I am saying, okay, 240 to 300, and the market stalls a bit. Not a bear market, nothing. It stalls a bit. We pull back here, like just overnight, we pull back here. All the technicals are suggesting that this is the trading range right now, 3212, 3185. So that's 15 and 12. That's 27 points. What's 27 times 8? 56, 216, right?
Yeah.
Right. So basically, the trading range, if it breaks out, we could go out another 216 or 240 points. Now, let's see if these numbers work. Now, this is going to affect anything that we do on the big cap stock, not the specialized biotech stocks and stuff. There's a lot of movement going on after hours on Gilead Sciences supposedly being looked on as a buyout by AstraZeneca. It'll be the biggest buyout ever in the biotech world. What do you think it's going to do for the biotech index?
Go high.
It's going to juice it up, baby. Anytime you get that type of thing, all our little biotechs that we played, including the big biotechs that we played, are going to zoom higher. Why? Because that's what goes up in sympathy. Just like Grubhub, in my opinion, is going to get bought out at 70 bucks. Now that the German company, which is a worldwide company in delivery, is looking at it. You guys did see that news that I put out there, and also suggested to buy more Grubhub common and options, right?
Yeah.
Yeah.
Yeah. And if anyone didn't, well, good luck to you, because when I buy out, you ain't getting the takeout, baby. All right, we're getting the takeout. We're getting the takeout. They're going to get bought out, no question about it. Now, what price is the question? Now that the Germans are, it's a bidding war going on right now. The Germans are in. The German company, I read about them a while ago. They're big. They're all over Asia. Like, they're bigger than Uber and everything. I mean, they're not bigger than Uber, but they're big. And the Germans don't kid around. Now, what price they're going to give them, I don't know. But I know it's going to be higher. So let's take a good look at the daily chart, ladies and gentlemen. This keeps you guys focused on whether you wake up in the morning and the markets are done like, oh my God, it's all over. We ain't all over, because this technical chart is so friggin' powerful, it's not even funny. This little dot is where we are right now. Now, if I showed you this chart, this was a rising wedge. A rising wedge generally does this. One second. I'm so glad you guys are here, because normally I wouldn't be sitting here on Sunday night looking at these charts, okay? So thank God you guys are here, that I'm doing this with you guys. I'll be looking at it like in the morning. All right. So a rising, this was what I expected. See this red circle that I put there? I expected some, pretty sharp selling here. Instead, the job numbers came out great. Great job. And we must, I'm just being completely neutral, congratulate the Trump administration and in conjunction with the Federal Reserve for doing such an enormous job to save the U.S. economy. You got to give respect where it's worth. I'm not getting political here. I'm just being very straightforward, like business. So all the idiots who shorted them, this is where the big selling happened. This is known as a supply zone. Back in the around the 11th of not 11th. When did we actually start the selling? Hold on. Started the selling around the 3rd of March, right? The big selling. So that's known as a supply zone. Do you guys understand that part? That means there's a lot of supply to sell, a lot of stock to sell. That's the Wall Street lingo. It's not a demand zone. A demand zone was there's a lot of stock to buy. Are you guys with me?
Yes.
Okay, good, good. Ask, a lot of traders, they're supply zone. No, I don't know what that means. They'll say, oh, that's what supply? Like, hey, you're supplying whatever. No, that's where the lots of supply to sell. So it's a resistance. And boom, job numbers comes out. We got to break through it. I'm like, holy shit. And now we're here. Now we can come back and retest. We already talked about that. But let's look at the upside. There is this green line here. This is a gap. And that is 3,300. Honestly speaking, another thing happened overnight. And I put it on the Twitter feed. Can somebody tell me, which is very market positive, that I've talked about extensively in my previous webinars?
The Fed buying
No,
stocks.
no, no.
It was
I didn't put that out today. Go
It
ahead.
was
The oil market.
Yeah, the Brent.
Thank you very much. I pissed on the Ruskies and the Saudis, because they're all bastards, by the way. All right, none of us want us to win. Trust me. I don't care where Trump goes and dances with the with MBS and stuff, out in Saudi Arabia. I don't give a crap. Okay, they eventually never want America to really dominate, but they are strategic friends. So I was pissed out of my mind, and Mike knows that, and other people know that when right during this crash, when the coronavirus hit, they decided to start a frigging oil war. And Russians pissed off the Saudis. The Saudis said, fuck, we're going to release another 1 million, God knows 10 million barrels into the market, and oil prices totally collapsed. You guys remember that? And if you want to know what was going on through my head and what I said, go look at my videos from March, early March. So that propagated the selling more. You got a freaking virus attacking us, the COVID-19, off the wet markets in China. That's exactly where it came from. I don't care what anyone says. Okay? Stop eating shit. You won't get a virus. So, and then the Saudis and forget the Iranians, the Ruskies, Putin, decide to demolish our shale market and our oil market. And right 2 weeks after that, our biggest shale guys, Harold Hamm, great senators, Republican senators from Nebraska and Montana, they said, we need to put a frigging tariff on these bastards. And I said, they should do it. Well, guess what? They finally came around. And I know President Trump did a lot of talking to both of them because he's friends with both of them. And now they're doing it. That's the reason why the markets are feeling like, okay, so this does not completely kill our shale oil market and our oil companies. Do you guys understand what I just said?
Yep.
Yes.
I don't understand the background of the markets before you actually become an options trader. Of course, you can trade options, but if you don't understand what's going on with the U.S. overall financial markets, that's different from my service, which will make you really super educated about what's going on, than just like another great trading service, which just, oh yeah, buy this, buy the 5 minute, like blah, 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 blah. Fine, that's their business, not mine. I'd like to be intellectually smart and rich. Okay? Because it does matter when you're a little bit smarter than others and understanding what's going on. So the great news is the Russians, Putin and MBS, Mohammed bin Salman, the Crown Prince of Saudi Arabia, are finally getting it together. And that's going to save our great oil industry, because the bankruptcy in the oil industry can take the market down 10,000 points, believe me. That was a big fear. The credit markets, the corporate bond market, it could be, doesn't matter what the Fed did, didn't matter what President Trump did, it would have demolished us. Now, President Trump has a strategic relationship with them. He didn't like scream and shout at them and piss them off because he knew it wouldn't work. He talked to them underneath the table, and it is working. Good for him. But don't trust those guys. Trust me. Don't trust those guys. They're snakes. The Russians and the Arab governments are snakes. They have no good intention for America, believe me. The Saudis played the song and dance with the Trump administration, partly because he has a lot of real estate business dealings with both the Russians and Saudis. That's public news. No, anyone living in New York knows that. But on top of that, on top of that, he knows that just completely pissing them off. And the only reason they do that is because the Saudis have a lot to gain from us. What do the Saudis have to gain from us, guys? Can somebody tell me? Come on, guys. You guys are smart people. What do the Saudi Arabians have to gain from us?
Military equipment?
Yeah, big time. And we saved their ass during Saddam Hussein's thing, because Saddam was going to bomb the shit out of them. And the Saudis didn't even have a real army. They have mercenary armies out there. They hire people from Africa and other places and Latin America to fight for them. Well, that's what the great Gulf nations do. They buy their security with money. So they buy a lot of arms for us, which is totally fine with me. Lockheed Martin, Boeing, Martin Marietta, General Dynamics, frigging buy our crap. We support their oil industry. Without us, they're nothing. Nothing. The Indians run their country. And the new guy is actually trying to make them a lot smarter, because all they were was a big, fat welfare nation. They still are. They still are. But there's a lot of smart Saudi young people who want to be smart, who want to work, but I don't personally think, and somebody's going to call me a racist, I don't give a shit, they don't have a work ethic because there's so much money. So that this new government is actually trying them to get to be a working nation instead of just hiring every brain in the world to go there, pay them big money, and let them just live there. And most of them just live there because they love the money. Nothing wrong with that. All right, next topic. So yes, so the OPEC is actually getting it together. That's great for the oil. We see oil spike, which has been spiking, which is good for the overall market. All right, looking at this chart. So you guys learned something about that, and it's like, okay. And I have a lot of good friends in Dubai and Abu Dhabi, and it's great places to visit. Would I live there? Not even if you frigging paid me. All right, I could go actually start my trading service out there. They'd probably pay me big money. But would I do that? Nah, screw that shit. I'd rather pay high taxes in New York and New Jersey and live here than go live there. Okay, that's my opinion. Would I visit? Absolutely. Amazing. All right, so what does this chart look like, guys? We broke past the supply zone. So 3,300, like holy moly, that's another, somebody telling me 16 and 100. Oh my God, that's another 800 points. Is that possible? Guys, it is. And that's why Ed Yardani, who is one of the, very renowned Wall Street market forecasters, just saw it. I don't know if anyone of you saw it. He said that the markets will hit all-time highs. Look, I'm not that crazy a bull, but it's possible based on the charts. Do you guys see what I see?
Yeah,
Now,
exactly.
these are charts that I drawn a while ago. Now, am I going to go to bed at night saying, no, we're definitely hitting all-time highs? No. I'm going to my toes like a fox on the trail, okay? I'm like a wolf. I'm going to be watching. I'm like, I'm like a wolf, like a sniper. I'm just looking. Like, all right, what is the chart saying? Am I get a nice pop on something? I'm taking it because short term, we are severely overbought. We could have a 1,000 point drop at a blink of an eye. Yet the swing charts are telling us we want to go higher. But we can do this along the way. And I explained that on the early part of my webinar. Yes or no? We could even come down and retest this breakout here, this one, 3069. That's another 600-700 points. So as an option, and then we could come back and retest this consolidation zone that I told you guys to stay long on, if you all remember. Of course you remember. This was a cup right there and a handle, which lasted for a while. It lasted all the way from April 10th, this range, till end of May. This consolidation zone, a very wide one. We made a lot of great trades in this consolidation zone. And then it broke out, a bull flag. And that bull flag went out more. That's like flipping the birdie to the hardcore shorts. And many of you who just sat on the sidelines just watching the action, and many of you who did very well, I congratulate you. But I believe that none of us caught the full potential of what happened. Am I right or wrong? And that includes me.
Yeah.
Yeah.
Yeah,
Right.
exactly. Because I take staggered profits and I'm just like, man, that is so annoying. I'm taking like a 200% when I could have made 600%. But the good news is that I'm actually delivering the goods. So I'm practicing the discipline like I always do. See, when you're too disciplined in trading, you leave a lot when the markets do this type of stuff. When you are like a wild, crazy, like hyena, you're like, wow, I know a couple of my traders who don't want me to post what they made. They're just like, what the hell? Let it go, man. I love your charts. I'm just going with it. I'm like, God bless you, man. And they made a lot. So when you have too much discipline, you make too little. Analysis paralysis. Well, I don't try to analyze too much, but still. So I'm a little bit pissed at myself, even though I had a great week, great month. Thank God for everything. So yeah, so we could go up quite a bit more. 3,200, 3,300 is another 800 points on the Dow, which would bring us up to 28,000 on the Dow. What was the high on the Dow? The high on the Dow was 29,568. So let's be, let's be a little cautious, but everything's looking pretty damn good, to be honest with you. Now, when things start to look really good is when things just happen. The markets are completely manipulative. They just throw in something and the algos will sell the markets down. So just remember that. I don't want to keep on going on about it. Just remember that, okay? But otherwise, looks great. Let's take a look at another chart and then we'll look at a bunch of stocks because that's what we do. Everything that I'm talking about making sense?
Yeah.
Okay. And if anyone's really offended about what I said about the Russians and Saudis, I'm really sorry, man. In that case, just like I always say, people kind of laugh like, give you U.S. passports, go live there. Please go live in Moscow, go live in Riyadh. All right. With all our faults, we are the best frigging nation in the world, and believe me, I know. Okay, with all our deficiencies, with all our faults, all our bickering, all our fake divisions, America is not really a divided country. We just think we're divided because we're kind of morons most of the time. All right? You want real division? Go live in another country. Go live in India and you see what the divisions are there. The caste system and how they kill other people because they are a different religion or a caste. Do we do that here? No. No, we don't. Yeah, we have incidences, but we don't. Look at South America when they slaughter a whole village because they are indigenous people. Exactly. Okay? So let's not talk about the United States being the ultimate racist country in the world. It's bull shit. Okay? We have problems. Yes, we can fix those. But please don't come and tell me like we're the worst country in the world. I hear that from some people. Get the F out of my face. Seriously. Go live somewhere else, go live in the Balkans when they slaughtered millions of people between the Serbians and the Bosnians and everything. All right, that's just my little speech, man. We got problems, but we can fix it. Okay, this is your weekly chart. Still looks so good. It's crazy. When things look that good, I'm just like, hey, hold on a minute here. This is like, wow. Right? This is like a wow chart, guys, because I've been walking you guys through this chart like week after week after week after week, right? Now look at this chart. Does this chart look like, well, let's look at the externals. This is the external chart. All the big shots. No, markets are going to crash, burn. We stuck to this. We stuck to this, didn't we? Overall, we said, let's stay long. Let's stay long. I'm still saying, let's stay long. Yes or no?
Yes.
Yes. Didn't hear that from other trading services? Well, some of them maybe, or the big shot analysts and the big shot reporters on all types of channels, Fox and CNBC and Bloomberg. Bloomberg is actually the smartest one, like I always say, but still. Tom Lee, the chubby little guy from Fundstrat. Tom Lee has been dead right. And I pushed Tom Lee and even Marco Klanovic. Katie Stockton doesn't show her beautiful face that much. And she's the ultimate technical analyst ever. Learned so much from her. But Tom Lee, you know who I'm talking about, right? The guy with the little glasses. And he always says, no, this is what happens and blah, blah, blah. He's been dead right on everything. He's been dead right for so many years, it's not even funny. He should freaking get a gold medal. You know who Tom Lee is? You guys?
Yes.
Yes. And if you don't, freaking Google him. Okay? So I don't follow people. I listen to smart people. How do you get smarter? By listening to smart people, understanding how they're thinking. That's what I do. Not the negs, like the guys, I don't even name names. They kind of, oh yes, we're so overvalued. No, I didn't buy, but I did buy. No, I didn't buy. I did buy. Like blah blah blah. All those talking heads that they bring on CNBC, and then they bring in Tom Lee, and Tom Lee's like, well, this is what I think is going to happen. Yes, we might pull back a little bit, but we're going. And the other guy is very smart. Is Tony Dwyer. He was actually the market analyst for one of the firms that I worked with, Wall Street. She's very smart, but even he was a neg at one point. Now, I'm not saying you to be super bullish, but I'm simply saying listen to what the reasoning is. And the other guy who I like a lot is the guy from, having a memory block here, Bespoke Research. Forget his name. Very soft-spoken guy. He just gives you stats of what happens in markets after certain things happen. Bespoke, Bespoke. Google it sometime. Learn from these guys. Mike Santoli is pretty good too, but he's more of a reporter. You know Mike Santoli, right? The guy on CNBC? He used to write for Barron's. I think he still does. I remember reading it a long time ago. He's pretty objective. But none of them show charts. Not even Tom Lee. So let me show you this chart. This is a weekly chart with a gap fill here that I'm going to show in the form of what? A dotted line? Yeah. Bingo. What is that showing us? There's a gap here when the market first broke on the weekly. And I'm like, this is a real break. And then it was just like, whoops. This is like when you're cliff diving and you realize there's like, where's the water? Like, where's the water? Like, you're just falling and you're like, holy crap, where is it? We're not going to hit the water. That's what it felt like, right? Except we were not really in that. We kind of maneuvered, but still, it was not fun. Because this is a weekly bar, but ugly. You see a bar like this, you want to be the hell out of the dog. But right after that, the market bounced back, 50% retracement, and then created a inverse, what do you call a inverse, inverse hammer, inverted hammer with a long tail. Look, like with a long tail, a green body though, but a long tail inverted hammer, which was like not good. This is on a weekly chart. This is for swing traders who are not looking to see what's happening daily. Now, when you look at this chart, guys, just a quick question. Where do you think it's going? Look at this. Look at the Stows. Look at the MACD. And I told you the MACD was going to get green. I said that repeatedly, month after month since March, after it hit this low, which we actually nailed. And then the crossover. So when you look at all three, external and the internals, I'm just going to ask one person or other, like, what does it look like to you? Aldi.
Looks like it's going up.
If you look at all three, right? Not just the chart. Remember, you have to mix it in, Aldi. You got to mix it in with the stochastics. You got to mix it in with the MACD. When you look at all three, and they are saying something, just give me 1 quick second, guys. I'll be back. Please look at this because I'm going to ask every single person what they think. And I want an honest opinion, not like, oh, Frank's saying that, so I just got to say it. Because this is what's going to keep you in the game for the next 4 weeks, ending June 30th. And what is June 30th, ladies and gentlemen? I'll ask you that when I'm back. Give me 3 minutes. Gentlemen, ladies, are you? Can you guys hear me?
Yep.
Yeah.
Okay, so Aldi, what is June 30th? Other than being June 30th. Okay, if you don't know, that's fine. Boss, from Wall Street and companies and stuff, what is June 30th? Okay, boss, you're out. Ed, what is June 30th?
All I could think of is like,
It's June 30th?
yeah, well, no, it's like
What? Go ahead, quick.
go away in May.
Go, no, go away what? Go away, where? Go where? I mean, I know I'm coming up to see you, but that's a different story. But we're going hunting.
I don't know. I'm
4th of July weekend?
well, yeah. There you go.
You're getting close. You're getting close. Yeah, that's actually very important. It's right before July 4th. Exactly. You never
Yeah.
want to short the market before July 4th.
The big money's going to the Hamptons and
But this is the Hamptons' big money. Crap. They're always there. They all ran away from New York, right when they are COVID. Hamptons mansions were renting for 50, 60, 100, 120, 130,000 a month. Okay, people with money to burn, they want to do that. Okay, great. And as if COVID won't go there, of course. They're all in New York, like going partying, and then they go to the Hamptons. It's going to follow them. And I'm sure a lot of them were sick. Okay, next, Matt.
End of quarter two.
Thank you. Freaking smart fuckers. Exactly. End of second quarter. Thank you very much, Matt. Matt, what's your last name?
Funk.
Yes. We spoke on the phone, right? When you signed up, like I always do, right?
Yes.
I'm freaking impressed with you, big time. End of the second quarter. So what's the repercussions of end of the second quarter? The markets will go up till the end of the second quarter to the levels that we are destined to go, technically speaking. Now, why? From the Wall Street standpoint, what do big fund managers get paid? All the institutional money, the big money which manages pension funds, your 401ks, blah, 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 blah. Where the big money's kept, mutual funds, everything. What do they get paid on? Other than making profits on stock, and most of them are frigging losing money because they're short. Mutual funds are not. Hedge funds are. Institutional funds are. Hedge funds are
Bonuses?
actually. Thank you. Who said that?
Audi.
Exactly. Bonuses. They get paid, let's say you're a big shot analyst or a big shot fund manager, you get paid like $450,000, and then your bonus is $2 million because you delivered, right? Exactly. Bonuses. Man, you guys are smart, man. Yes, bonuses. Are you guys listening to these people answering these questions? I'm so freaking impressed. I could just say, hallelujah, man. Yes. So if the bonuses are due at the end of the second quarter, which is June 30th, then why not keep the market up till June 30th? Because remember, why do markets go down or up? Why do markets go up and down?
Goes up if there are more buyers than sellers. It goes down.
Yes, exactly. Yeah, so who said that?
Z.
Yes, exactly, Z. Another smart cookie we have in the group, okay? So end of the quarter, I'm going to say EOQ. So end of second quarter. So if you're going to have like a million, like $250,000 in bonus or $1 million in bonus, why should you sell your stocks? Regardless of what's going on. Now, anything can happen. The biggest risk to the market is the Federal Reserve says, you know what? We put in so much money, we're going to start to tighten the faucet. Now, that's big risk. The second, and in between, there's going to be fluctuations. And this coming week, there certainly will be, and especially the middle of the month, as you know. Middle of the month, there's always major movements. But then I'm talking the end of the month. So you got all these stocks you own, Apple, Facebook, Tesla, Disney. I'm giving you big names, Nvidia, Micron, AMD, Square, I'm not talking about the specialized situations that are going up a lot, like ABMD, Anthem Health, all the small stocks that we play. Talking about the big stocks. So why will you sell unless there is a major unquantifiable black swan event, like a major resurgence of coronavirus, COVID-19, which hopefully does not happen, or a major collapse in the credit markets because of an external situation or a political situation in the United States? Why would you sell? If you're managing 30 billion bucks, why would you sell big chunks of your holdings and bring the market down 2,000 points right before your bonuses due?
You want to print your performance?
No, but why would you sell? You wouldn't sell. You want to show your performance saying you hold those stocks and you have this much in your P&L. So when the end of the quarter reports go out to all the mutual funds, which mom and pop own a huge amount of mutual funds, even though mostly they're in money market accounts, you wouldn't sell, correct? So futures right now are up 11 points on that small doji. So technically speaking, that's a major bull flag. This is 3 marching soldiers. That's what they call them. These 3 candles on a weekly basis. That means we're going higher. These are called 3 marching soldiers. That's actually a technical term. Go to Investopedia. The MACDs are telling you that we are overbought and we can move sideways for just another 3 weeks just to get the bonuses. So I believe the real correction and stuff comes after July 4th. Are you guys with me so far?
Yep.
So what's the cleanest way to play this without individual companies and stuff? What's the
SPY.
clean? Yeah, the SPYs. I told you guys to buy the SPY 300, 310s, and the SPY frigging went to 321. Told you guys to buy that when the SPY was at 270. Yeah, the SPYs. We could buy the SPY 330s right now with position management, that you don't want to buy the whole position tomorrow. You buy a little bit, it might go down a little bit, but as long as the structure and the internals remain the same, because this is what it's looking like to me right now. And I've been doing this for a while. And I've been wrong. Of course you've been wrong. That this looks like a gaping mouth, which is going to move sideways above the 80 RSI on the stochastics, which means the market in between little fluctuations is going to remain very strong before it hits that major gap, which is a lot higher, 600 to 700 points higher. Predictive analytics, you're hearing it here first. Not the first time. People who have been with me has heard this many, many, many times. Keep politics aside. Politics doesn't make you money. Price movements don't make you money. Charts make you money. It's not going to happen in a straight line, ladies and gentlemen. We'll probably do this a little bit. Acceleration channel, the green line, come down to 3,100 maybe. That's 100 points. That's roughly 600 points, 600 to 800 points. But as long as it holds, we're getting to fill this gap. Now that's a major resistance. If we break this gap, we're making new highs like we won't even know. I'm not even going there. I'm simply saying we have room to move. And internals are all saying yes, yes. So play the clean SPYs. Let's go into one stock that can take the stock take the market single-handedly up there. It's a Dow Jones Industrial Average component, which we have been making money on big time. What is that stock?
Boeing.
Boeing.
Thank you. Thank you. Boeing. Let's get Boeing in the picture. I've always been a huge proponent of Boeing. I am still a huge proponent of Boeing. And I will remain so because they're the ultimate American company. that nobody believed in. Nobody still kind of believes in. How many analysts, educated derelicts who are that bullish on Boeing? I don't see them. Great. Keep it up, guys. Because Calhoun, who runs Boeing, is a lot smarter than some idiot analyst trying to figure around with numbers while he's running a real company that is 2 or 3% of the US GDP. So before I go to Boeing, this is the weekly chart, still looking damn good. Look at the weekly chart on the E-minis. Oh my God. If you're really short right now, you'd be like crapping, you'd not just crapping in your pants, you'd be like literally ordering one of those 100-pack of colored diapers from Amazon. This is so powerful. Once both the lines, the percentage K line just moves up into over 80, that's when you're like, okay, ease back. Now, this is the swing version. I'm not saying we're not going to get fluctuations during the week, during the day. Look at the McClellan oscillator. No signs of technical damage, even though it is very overbought. 131, come down to 100. When this was here on the 3rd of March, 2nd of March, and then the markets bottomed on the 23rd, there was a positive divergence. Markets didn't bottom till the 23rd or so of March, but the McClellan oscillator was already telling us we want to go higher. And we went. So the next time we get down here, guys, I don't need to tell you, you tell me, Frank, get your frigging pants pulled up and buy the crap out of the market. Can you guys do that? Because the more experiences that you have with the market, the better off you know what the systemic structural patterns are. Did you understand what I just said?
Yep.
Yep. It's all structural patterns, guys. I don't care what service you subscribe to, how many great guys and stuff. Very few trading services. I have to say this. I have to say it. I'm very straightforward, straight in the face kind of guy. Okay? Some people like me, some people don't like me. Who the hell cares? Okay? Like I always say, as long as my wife loves me and God still likes me, okay, my pets love me, I'm fine. I don't care who likes me or not, because my track record speaks for itself. Now, am I taking full advantage of it? I personally don't think so. I think I should really take full advantage big time, but I am not a gambler. I'm a systematic, disciplined trader, so I do leave a bunch of profits on the table as the markets move higher. And I do get cautious at times. As I said, short term, a little bit cautious. Swing-wise, going to the end of the month, very bullish. As long as we don't break this level on the E-minis, which is 3070. Because once we break this channel, which is close to the 50-day moving average, we're in trouble. But till, I don't want to we'll cross that bridge when we get there. Are you guys with me?
Yep.
Right.
Yes.
Right now, we are moving very fast, very quick. It's called the standard deviation, how far we're moving away from the highways, which is the 34 and the 50-day moving average. These are the highways. So the further we move away, that means we're getting overstretched because the markets like to stay on the highways. However, when this COVID-19 thing hit, we went into a standard deviation mode never seen on US markets since God knows when. This is your highways that you follow. Let me change the color. Now, what I'm showing you is things that you guys can do yourself. My job is to make you guys independent traders. So you can tell me at one point, Frank, you taught me so much. I did really well. I learned a lot. See you later. But stay with us, because when the markets get really tricky and weird, no one's going to guide you as well as Clueless Trading does. That I'm going to assure you. These are the highways, the 34 and the 50-day moving average. We just went way off the highway, deep down the canyon, but we survived. This is a standard deviation, I believe, of almost -8. Okay? Read up on those terminology on Investopedia, please, so you understand. So we went way off the highway. I'm just explaining to you on it. 9 out of 10 times we try to get back to the highways. And that's exactly what the market did. In between 6, 7, 800 point drops, multiple 1,000 point moves, the candles, big drop here, stayed within the channel. So now we are above the highways. Now, if we have, and somebody answer me, somebody aside from Simon, whose brain just moves way too fast, which is a compliment to you, my friend, if we have a standard deviation approximately of -8 from the highways when the COVID thing started, okay, and where we went down to, and we bottomed on the 23rd of March. On a systematic basis, and I'm just going to show you this. This is the highways. And this is certainly not a V-shaped recovery. This is this type of recovery. So don't believe the media. So bottom line is, if this is a -8, I'm going to give you one hint. Every action has an equal and opposite reaction. Then what should be the standard deviation of the highways on the upside?
+8.
Yes, on a real technical basis. So that means the markets will make a new high of 3,600 based on the channels. And all those great analysts, not analysts, analysts, okay, with their pink diapers will be so shocked. And you're starting to see the media write about it. And I just put that post up, that the market was right and they were all wrong. Read that. I've been talking about this for weeks now. Yes, it could be a +8 standard deviation, massive overshoot. This was a massive overshoot. So can there be a massive overshoot over the next couple of months? Possible, but I'm not even going there because I'm a disciplined trader. I want to take money, make money along the way. But if somebody wants to buy calls from a technical standpoint, somebody wants to buy calls going into September, give it a couple of months, like 2-3 months. Buy calls at 3,400 on the S&P or buy calls on the SPYs at 340. Feel free to do so. Buy one and see what happens. Buy one. And how much would that cost us? Let me just take a look at it. I'm just going to give you an idea. Are you guys with me so far? We're talking trading here.
Yep.
Okay. Okay. So I am going out to, forget July. I'm going out to September, right before the elections. And I'm going out to the options for 18 September, monthly options expiration. And I am saying, let's look at 3,500 on the SPY, on the SPX. The 3,500, hold on, I gotta do this right.
448.
How much? How much are they? Sorry, somebody looked it up faster.
448, so $448. That's the mid price.
Hold on, 3,500.
That's September 20th, right?
Okay, the 18 Septembers, right? Those are the monthlies, right?
I got it as September 20th, but I'm not sure.
Let me look at the correct date. Third Friday of each month is
Are you looking at the SPX
Friday.
or?
Yeah, I'm looking at SPX, September 18, and I'll tell you, they cost $20, the 3,500 calls. But they have 22,000. I'm going to show it to you guys. Hold on. 22,000 open interest. You think somebody doesn't know it's going to go there? 1 second. This is like unbelievable. Do you guys understand what we're talking about here?
Yeah.
Open interest on, I think I got it. Okay, let's clean this out. See, this is mind-boggling. There's that much open interest. That means a position sitting there. The real hidden smart money sitting there. Just the way lots of calls are sitting at the Tesla 1000 that we have. They know. Somebody always knows. Trust me, that's one thing I realized. Now, who that somebody is, I don't know. So this is one way of looking at it. Let's go 3,500. Sorry.
On the SPY 350, there's 21,000 open interest.
Okay, so we're looking at the SPX, and we're going to put out the SPY 3,500. So we looked at the chart and we said the markets could possibly go to, whoa, 22,000. One call would cost you $2,000. I thought they were going to be like $4, $5. Didn't you guys think it would be cheaper? Because they are so way out of the money, right?
Yeah.
But they're not. They're so way out of the money. It's going to cost you that much? Look at that. Now, on this, there's like more stuff going on here. There's 4,000 here, but somebody bought 1,500 or some group or whatever. People bought 1,500 contracts at $7. Betting, talk about real betting here, that the SPYs are going to go to 3,600. So let's look at the SPYs. So we look at the SPY 3,500. Why is everything so slow? Okay, 18 September. Anyone who doesn't understand what we're talking about, please feel free to chime in. So we're betting way out of the money, 350 calls. Whoa, 21,000. The 340 calls saying that we're going to go to roughly 3,400 on the S&P 500. Almost 22,000 calls, and they bought more on Friday. I love seeing these 20,000 call type of things. How much should this cost us? $2. I like it. Let's buy a bunch. It's my opinion. I'm just, and buy one. How about that? Just to see whether this very bullish predictive analytics I just explained to you based on the charts can happen. What's your worst case scenario if you bought one? You lose $250. Are you guys with me?
Yep.
Yeah. This is how you learn. This is how you learn. And if it does go there, your $2.50, you're going to be selling it at $10, buddy. Your downside is $250 on one call. Your upside is $1,000 with a net profit of $750. Now, that's not going to change your lifestyle, but it'll teach you something about the markets. Now, if you really want to bulk in and buy 10, then you make some real money, real change. And you got till September. Now, in the meantime, you think the $2 or 205, it's not 250, it's actually 205 on the ask. It's like $205. Now, in the meantime, you think the 205 will remain stagnant between now and September? You think the calls at 205, what are they going to do? They're going to go like this. They'll go down to 1. They might even go down to 50 cents. What would I do? I would dollar cost average, sticking to the game. So if you bought one, I would buy one more. So I'll bring my cost down to 75. Let's say they go down to to 1. I'll bring my cost down to $1.50. That's called dollar cost averaging. This is a test, an experiment to see whether or not that bullish forecast on the U.S. economy works through into September. But in the meantime, there'll be fluctuation. Now, if in the initial time that $2.05 that you paid jumps up to $3, what do? You just sit there and say, oh, hallelujah, great? No, you take some profits. But if you have one call, what does it matter? But if you have 10 calls, it matters. You just made yourself $1,000, right? And if you have 20 calls, you just made yourself, they say, if you have 20 calls at 2, you put down $4,000, you're up to $6,000. So you made yourself 2,000 bucks. But just as a test, just to become a real trader, just buy a few calls or buy one call. It's just a suggestion. Are you guys with us so far?
Yeah, and Frank, that amount of open interest is
Yep.
$4.2 million worth.
There you go. Paul comes in with the real dollar number. This is how much? So yeah, it is 21,000 times 2. So what is it? What does that number come to, Paul?
4.2 million.
Which in the bigger scheme of things is not a big deal. But I can assure you that as the markets climb higher, you're going to see this open interest rise dramatically. Dramatically. This is just a blip, 4.2 million bucks. This could be one player betting that on a 4.2 million. But anyway, so just want to pass that on to you guys. So guys, it's almost 11:42. My God, you guys are listening to all this garbage for all this time. I love it, you know. Like, this is amazing. I wouldn't be sitting here listening to myself. But listen, so there's lots of stocks in play. All right, I just showed you the bigger picture on the market. Throw in a stock you guys want to see, and I'll just explain it very quickly. All my stocks, you know, I would say majority of my stocks that I like are directly on the Twitter feed. There's so many things moving so fast, so quickly. It's really hard for me to keep up. I'll be honest with you. So I'm still doing very well. I'm just going to show you one of my outliers, which is ABMD, ABiomed. I've been telling you guys to buy it for the last couple of weeks. Stock went berserk. I like stocks like this in markets which are short-term overbought. Massive falling wedge, breakout, 50 fib at 290. Calls were up gazillion. I bought them at 2, they went down to $1.50, and then on Friday, these are the 220 calls. I had them at average cost at 4, then they went down to 2, then they went to 6. I just left it there. And on Friday, because I've been telling people to buy it all the way from here, they hit 32. Show it to you guys in a second. 1 second. Right there. Focus on this. All right. They were 19. I just left them. They went to 32. The initial entry on these when the market, and this is one of my screens, okay? The last column is always the percentage column. 1 second here, ladies and gentlemen. Can get this out. Hold on. What? Okay. So I'm looking at 285. That's 35 points from here. Look up the company, serious company, never should have been here. We started getting into it here, broke out. Now it's a real breakout. Both on the externals. Look at that. Gaping mouth, we call it. Not gapping mouth, like a gaping mouth, like a frigging shark ready to eat all the shorts. All right? Beautiful. McClellan. Volumes picking up. Is it a no? I hate saying no-brainers, but in my opinion, it's a technical, high probability move. This is where the stock fell. I believe that's where it wants to retrace. And if it breaks that, see you later. We have a 3450 crossover on top of a massive breakout over a falling wedge. This line is about, the 5-week moving average crossed over sharply over the 50. The 34 is curling to go over the 50-day moving average. That's huge. Look at things like that too. They have nothing to do with China. They have nothing to do with Apple. They have nothing to do with Tesla. They're a hardcore biotech company doing great stuff. And might get bought out too. Let's look at Tesla. I can't find one single thing wrong with this chart. The channels point to 1100. That's the reason why even the $1,000 calls are $10 or $9. Because they know it wants to go there. Whether it's SpaceX or whether it's this or that, whether it's the Berlin Gigafactory, whether it's Shanghai production going through the roof. It's a good looking chart. Is it a crazy stock? Like on a certain day, like down like 10, 12, you're up like 11, next thing you're down 6 because the market pulled back a little bit? Of course. But I'm just showing you the overall chart. Is it really stretched out a little bit? Yes. Did it break a major downtrend that I showed you? Yes. And I know Paul's pretty hot on Tesla too. So there is nothing wrong with the weekly charts. Let's look at the daily. Nothing wrong with that either. That is the ultimate bull flag. Now saying all that, the stock might be down just like $15 tomorrow or nothing. But if the charts don't change, we stay long. That is a beautiful bull flag. But that little red candle on Thursday was like good for what, a 20-point drop? Did it change the structure of the chart? No. That is the difference between a disciplined technical trader and a price-chasing emotional trader. Do you guys understand what I just said?
Yeah.
Yes.
Exactly. Because I love the opportunity to buy the thing cheaper than worry about, oh my God, am I going to sell and run? As long as the charts cooperate. That's all I'm saying. And the charts are certainly cooperating. This to me is very hot. And the analysts and the analysts on this are so wrong that some of them are actually coming around right now and saying, man, no, they're a real company, you know. Even Kramer's like, oh, I really like Tesla. He was like, I hate Tesla, blah, 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 blah. Does Elon Musk give a shit what these guys say? No. Let's take a look at a stock everybody and the grandmothers look at, Apple. Holy crap. Now, I'm not in Apple. I haven't been in Apple lately, and I'm an idiot. But that's okay because I'm doing great on the other side. This is a major freaking breakout. Whether it's an ascending triangle, whether it's a new all-time high, like, oh my Lord. Now, my thesis on Apple, which I've explained to you guys in previous webinars, Apple is an essential commodity, especially after COVID-19. Grandpa and grandma are using Apple to do everything, not just Zoom, ordering groceries, ordering pharmacies, keeping their pulse in check. God forbid something happens to them, gets alerted to their doctor. Telemedicine's hot. Teledoc's like beautiful stock if you trade it right. And if Apple enters this huge acceleration channel over 336, the stock will go to 380. It will happen. Now, in the meantime, we got a gap fill here at 310, so the stock could lose $20 one day, no problem, but it does not change the trajectory of the company. Let's look at the next one. Facebook, another one that Paul loves and has done very well in. Still a bull flag. Still a bull flag on the daily. Now, Facebook has political issues they're dealing with, social media, all that stuff, just like Twitter. So that one has to take into account. Aside from there, I'm sure the business is booming. I haven't been in it for about a week now, but I have nothing bad to say about it. But you guys will be quick on these things because when they move up $3, $4, $5 and your options are up like 100%, whatever, don't be an idiot. Take the profits. Move the strikes up. Do whatever you need to do. Don't just rely on the fact that, oh, the great charts look great. The swing chart shows me 245 back to the highs, and if not higher. That doesn't mean that you're going to give back some beautiful profits that you made overnight. Yes or no? Exactly. What? Give me one of the stock that you guys want to see because I got to wrap up. It's almost midnight.
MGM.
MGM.
Yeah.
Okay. MGM's like the same deal like Win. I like Win better because it's got more muscle. So MGM's daily chart is fantastic. This chart, by the way, I haven't looked at this chart in a while. This chart was drawn a while ago. Bottom line is the stock can reach 24. Calls are cheap. There was a lot of selling, looks like, on Friday. A lot. Look at that volume bar. 56, 57 million shares. Like, holy cow. So personally, I'm not that hot on it short term, even though they are a true beneficiary of the reopening of Vegas. So still with it, still think the stock can go higher. Don't like this massive volume spike. Some big boy sold it hard. 56 million shares. See that volume? After buying an almost equal amount the day before. So I have to take that into account. This is pretty massive resistance. Where is this coming from? There must be a line here somewhere that I had drawn. Okay. That was the last support back on back on June 3rd, 2019, a year ago. Oh, how prophetic. So I still would like the stock to break over the downtrend line, and looks good. Not super excited about it, but the weekly volume was tremendous. So yes, more bullish on it than bearish. Let's take a look at my Win, which we kicked butt. Still long. Win is MGM does not have operations in Macau, do they? No, they don't. Everyone knows what Macau is. M-A-C-A-U. It's not a parrot. That's with the O. Macau is the ultimate gambling center of the world. That's where the high rollers from China and Asia and Philippines and Bangladesh and these countries where they have multiple billionaires, while the countries are dirt poor, okay, go to gamble their money because they are the ultimate gamblers. Who are the biggest gamblers in Vegas? Guys from Wisconsin and Pennsylvania?
Asians.
China.
Asians, exactly. Ballers. All right? Indians, Koreans, and of course Americans. All right? Exactly. They are the high rollers. They walk in, it's the red carpet through and through. So Macau is the ultimate gambling thing. China's coming up, the economy is stabilizing. They're all going out there. So I like Win more because Win Macau is big. We've done very well in Win. They were selling on Win too, yet the stock kept on going higher. Interesting. Don't ask me why. I still think the stock gets to 110. I have the 110 calls after selling the 95 and the 98 call. Some of you participate on the trade did extremely well. Generally, on a $3-4 move, the stock will go up 120%, 130%. I played Win for many years, and now it is on my radar. I believe the stock goes to 110, 61-point retracement, and if things really settle out a little bit more, the stock can go to 130. I'm more hot on Win than I'm on MGM. The last one is Las Vegas Sands. I don't like it. These candles, I don't like it. This candle, which is a red doji, I like. To me, from a candle structure standpoint, let's say I knew nothing about these companies, I like this a heck of a lot more than MGM or LVS. And the calls are not that much more expensive. Does that answer the questions?
Frank, this is the
Yes.
last question.
Go ahead. While we're doing this, let's do it.
Talk about Gilead getting bought over. Can we look at the chart and see?
Yes. Very good question, Z. Very good question. Gilead, if they do get bought over, they will literally get bought at $90. Just based on my charts and based on the premiums they normally pay for these companies. Premium that they pay, this will be the largest deal. Gilead is $95 billion or $90 billion market valuation. AstraZeneca is $142 billion, right? Like 50% more. So Gilead, just from a quick standard, is at 77. If they get even a 40% premium, the stock will be 107, which will be right here. Whichever the case, the stock will gap open up tomorrow. This is not like confirmed. So let's look to see where Gilead can go. And I'm not in Gilead, and I'm not happy about that. Because we have traded Gilead before. Options move slow. We have made money. I still have a position in Moderna, which I believe will be bought out, in my opinion. Regeneron, my favorite. That's a beast. Hopefully Regeneron in sympathy, because the biotech sector will move, because Gilead is a big component of the IBB, right? Which is the biotech index. It's a big boy. It's like the S&P 500 of the biotech index is the IBB. So bottom line is that it'll push that whole sector higher. So anything in there will go higher, and hopefully Regeneron goes on higher too. So if it does go up and enters the acceleration channel, this is this line, the stock will be 102. So yes, if they do get bought out, see, it'll be in the range of 90 to 102, if not higher, because Gilead will never sell themselves for on the cheap, given they have remdesivir under their belt, and so other many drugs that are in play. So on that note, let's look at Regeneron. What can I say? The bull flag is intact. Does the stock do funky stuff like down 12, down 13 on a certain day, and then push up and go positive at the end of the day after retesting the breakout? This was the breakout level. This is why I love technicals. And if I just looked at prices, I would have mad cow disease, all right, or mad bear disease, like some of you might do at times, right? Instead, I look at my charts and I stay calm. Remember, we used to have mad cow disease. Guys, remember that?
Yep.
Yeah, serious stuff, right? Not a joke. So let's not get mad cow disease as traders, all right? This is still fine with me. Now, I wouldn't like it if the stock went to 564 and broke below my rising wedge. That's a different story. But for now, I like it. And I think that the stock, and if I can draw this for you fine individuals, yeah, I'm looking at 625 as the next level. Do the options move? Oh boy, do they move. Do they screw us with, they don't screw me, but they screw a lot of people with the bid-ask price? Yes, they do. It is complete blatant highway robbery. Options are like 30 on the bid, $3 on the ask. Like what? And then you try to buy it, you buy it at 1. They're like, no, they push the bid up to 2. So if you have a lot of calls, you'll see your P&L move so fast, just by you toggling to get in. Do you understand what I'm talking about, guys?
Yeah,
Yep.
especially
Yeah.
with this.
Like let's say you have 10 calls, and this is damn good too. And this small doji, red doji on minor volume. I love it. Look at this volume. That's when we went nuts from 45 cents to God knows $20, right? Previous week. So now it pulled back a little bit. No big deal with me. Big deal with me if the stock breaks below 563. That's a big deal with me. But I wouldn't short these type of stocks. Just the way you wouldn't want to short Tesla, because they will burn your hands. Okay? So you rather look for inflection points to buy rather than try to short. I have one last stock. Any of you throw at me, anybody, and let's wrap this up. Nobody?
Hey, Frank,
SDC.
okay, go.
SDC is a long-term play. Smile Direct Club is in a beautiful uptrend. I believe the stock will hit 1144. This is a real company. As the economy in the US and Asia open up, they have signed ink deals with big companies. Read up on the news. Small Direct Club will fill the upper gap at 11. Calls are damn cheap. You can buy them at 30 cents, 40 cents, 60 cents. We did very well on the first round. We are in it for the second round. You have to have a little patience. You can buy the common because it's cheap. It's $8. You can buy 100 shares. You can buy 1,000 shares. You're a big boy, you can buy 10,000 shares. But let's say you buy 100 shares, $800. Okay, just as a starter. As it moves higher, you want to buy more. This is a good looking chart. This is a weekly. I believe the stock was 21. This is a real company and everyone knows what they do. They're like Align Technology, Invisalign. So let's take a look at Align. I haven't been trading that lately. Holy like this is sick. Stock was 127 at the crash. It's at 288. And like an idiot, I'm just like, I have it on my screen. I haven't been trading it. This is Align Technology, Invisalign, the braces. Small Direct Club is the new version of it where they do all the, you can walk into the clinic or you can do it directly on your iPhone, whatever. You can do specs, you know, open your lovely mouth and give them the specs. I don't know. They have all these fancy software. Send it to them. In 2 weeks, it comes to your door. Align could buy this company. So I think these are the type of companies have a lot of potential on. Aside from the fact that what somebody's going to say, no, I don't want to get mail-in braces, you know, I want to walk into a crowded dentist place and get the virus and then come out with some nice teeth and COVID-19, you know, no. This is the, I believe this is the new generation of companies which are doing things online. I like the company a lot. It's my opinion. I like it technically. I like it fundamentally. What's the other one somebody asked me?
RETA.
Rita. Rita is a complete spec play. Now this is the chart doesn't look that good, but I keep on buying the cheap things. Now, this is a complete speculative play. This is a company which is a monster. Like if they do what they're doing, and please read up on it on yourself, then this stock, in my opinion, somebody's going to buy them. I do. So right now it's getting pretty cheap. Based on what I see here, this is your support level right here, 126. Worst case scenario, 110. I do not want it to go there. Upper end of the level. Analysts have a price target on this stock of 250, and not like some bullshit analyst like from some no-name firm. You're talking Cantor Fitzgerald. You're talking big names who are respected. I respect them. They have $225 price targets. I'm like, what? I'm not going with their price targets. There was some systematic selling on the stock. 1, 2, 3, 4, 5, 6, 7, 8, 9 days in a row. It's coming down to a level I would be buying more. Some hedge fund systematically sold it. Now, does that mean it's all over? No. This is a complete speculative play. I'm long the stock. And these are the kind of companies which it has happened before where no one's looking at. You wake up one day and Riata Pharmaceuticals is up like 30 points. You're like, what the hell? Why didn't I buy it? Because they never gave you a signal to buy it. It's getting cheap enough for some big pharmaceutical, big biotech, pharma wants to buy some innovative companies. That's my opinion.
Okay.
Yeah, exactly. These are not the companies you want to put a crap load of money on, but you want to have some position in, because when I'm putting something like this out, it's not because I just woke up one morning and said, oh, I dreamt of Riata. You know, was that the name of my ex-girlfriend? I'm just kidding. You know, of course not. It's like, I know these companies. I've dealt with 4 buyouts over the past couple of years, like Juno Therapeutics and a bunch of others, where nobody believed in it, and all of a sudden your 40-cent options goes to $40. It's happened. And you're like, hallelujah, God actually loves me. Well, God actually doesn't like you. I mean, love you, but he kind of gave you a break. All right?
Frank.
So these are the things. Okay, next one.
Frank, I got a question about Rita.
Don't ask me any detailed questions right now. So go ahead. Go ahead.
I bought it for $10.
Okay.
And it went right up. It wouldn't sell all day.
I'm sorry. It went right up where?
So I bought it for $10. It was asking $130 a contract. I got it for $10. Bid was 10.
Yeah.
So it went through for $10. I tried to sell it all day for $30. It wouldn't sell.
I know. This was a while ago, right? Not right now.
This was Friday. And a couple other people bought it too.
Hold on. The calls were $10?
No, they was asking 130, bidding at 10, asking 130. So I tried it. I said, you know what? Let me try it, just see what happens.
No,
so I bid it $10.
Hold on a minute here. I don't know what the hell you're talking about, because the calls are going for like 77 cents to $1.
Oh, the ones you.
Yeah, the 200 calls. We bought the June 19 200 calls on Rita as a complete speculative play. So what are you talking about $10 for?
Yeah, Friday showed it on my screen. It showed at
I don't give.
2:35.
Hey, listen, you guys wake up and smell the coffee. It doesn't matter what it shows because they play these games, okay? The bid and ask.
Right.
So my question is, what? You go like an idiot and buy it at $10? Is that what you did?
Yes.
Oof.
Okay, in that case, why don't you slap yourself, have a nice cup of coffee, and go home, all right? Because that's the
Couple other guys
stupidest
bought
thing
it
ever.
too.
Well, that's their problem, not mine. You never buy at the offer. You go, if they have a bid and ask that wide a spread, I don't give a flying hoot how many guys buy it. I've been talking over and over and over again. You know, okay, maybe it's a learning experience for you. Good luck, lose money. What an idiotic move. You went and bought it right at the offer. This is so shocking. I don't believe this. You got to play in the middle. Where was the bid at that time when the offer was at 10?
I usually do. I just tried it to see, you know, because it was
Okay.
so off.
Okay.
I said, let me see if they, you know, go for it.
So
I didn't want to
what
buy
did-
too high because sometimes you buy high, then as soon as you buy it, then you lose it.
Listen, it's midnight and my brain is fogged. Did you try to sell it at 10 or did you buy it at 10?
I bought it at 10, tried to sell it at 30. It was up as soon as I bought it, 200%.
I have no idea what you're talking about. Let's talk about this tomorrow. Really, I have
Okay.
no freaking idea what you're talking about either.
Well, it happened to
Rita's-
a couple other guys too.
No,
You know,
no. You try to sell it at 30.
yes.
The freaking options, the 200 calls are at 45 cents. What are you talking about? What stock are you talking about?
Well, I tried to sell it at 30, 0.30. I guess that's $30.
Oh, please, excuse me. All right. Don't give me a freaking headache at midnight. You said $30. What are you like drinking too much tonight?
No.
You know, come on, man. $30. I bought it at 10.
Well, I mean,
You bought look, let's shut up and listen to me. Shut up and listen to me. You're gonna be a trader, talk like a trader. You said you bought it at $10. What $10? You bought it 10 cents,
No,
you
sorry,
mean?
10 cents. Yes, 10 cents.
Thank you very much. Good night, guys. Let's end this session. I'll talk to you tomorrow. The stupidest thing I ever heard. I love you, man. Okay, get your numbers right. Don't tell me $10.30.
Yeah, no.
What is this guy? You know, seriously. Yeah, but you can't do that. Exactly. They play the games. I understand what you're saying. I know what you said. $10. You bought one call at 10 cents. You know, it's $10. I get it. But you got me confused. I'm like, hold on a minute here. No, don't be sorry.
It's kind of late.
Tell yourself sorry. Don't tell me sorry. Okay. I'm making way too much money to be sorry about anything. So my bottom line is real simple. These are the bid-ask spreads are like wow. The thing closed at 45 cents. Why didn't take it from 30 cents? Don't ask me. That's the way it goes. First of all, because it's way out of the money. The stock is 126, 100. All I do is I keep on buying. I got a whole bunch of calls, just like Regeneron, where it went from 45 cents to 28 bucks. I got 19 days. I got 11 days for it to expire. I'm going to see what it goes. I've seen way too many of these things happen. And if I lose it, I lose it. That's what I call my lost capital. My average cost on this trade price is roughly 60 cents. Stock is at 45 cents. I got a whole bunch of calls. If I blow up, it doesn't matter shit to me. Okay? So, but if it goes, I'm going to make just what I've shown on many other stocks. Now, why they don't take it from you or not, don't ask me. Because that's the way they play these games on these type of stocks where there's a spread is very wide. So that's why you got me confused. That's why everyone understands why I was like, what the hell are you talking about?
No, I apologize.
$30. But honestly, if they do get bought out, you will get $30 because it does happen. So whatever you put in there, if you're playing the whole game, like, you know, rolling the dice and putting your whole account in there, you're done. You're going to get blown up. And if it goes right, no, let me finish. Listen, we're big boys here. So, and if it goes, you're going to be like, Frank, you're God number 2. Well, I don't want to hear any of those. My thing is very simple. The stock does have potential. I don't understand why these analysts have such very high price targets. Something is going on. The chart is reaching a level where it's getting really cheap. I kind of like it, but it's not your natural type of thing. You know, it's not like something like the SPY or the SPX and this and that. This is a complete speculative play. If it goes, we're going to make a crap load of money. If it doesn't, we still have 11 days. Let's see what we can do. On that note, God bless you all. And by the way, who is this? Who asked me?
It's Kenny. Kenny.
Okay, Kenny. Yeah. Remember, small gets very big, but these are speculative. These are almost like playing penny stocks with big billion-dollar companies when we're playing the options on that stuff. You know what I'm saying? So
Yes.
it's happened before. But the ones I like most, aside from the speculative stuff, is the Regenerons and those type of companies. You know,
Hey, Frank?
yeah. Go ahead, make it quick.
Oh, yeah, I know you're ending. I just wanted to kind of bring it back to the, main theme of the call here, and just
Yes,
looking
go
at
ahead.
some charts while you were talking there too. And, I think
By the
a
way,
good observation.
this for the newer members. 1 second, I don't want to cut you off, Paul, because you always give great information to everybody. This is the Nasdaq 100, which is techs and biotechs, where the apples and everything lie. Look at that massive breakout here. But go ahead, Paul, with your.
Yeah, I think like with all these major names, like, Apple is a great example. It's breaking out. I mean, when all these names are breaking out, it tells you something about where the overall market's going. And I was just looking
Correct.
at the monthly SPY chart as well too. And I was surprised. I didn't realize this. Like the MACD hasn't even crossed bullish on that yet. The RSI is only 59. The
Nope.
stochastics just crossed, and there's three white shoulders pattern for June forming on there too. So that 360 call, I think, is going to get paid.
I think so. So listen to what he just said in simple terms. Fucking going higher, okay? Because this is big time crap that happened here. I don't have the MACD here. I have the Stows and the McClellan on this particular chart. It is sick. This is like a shark with the mouth this open, ready to just like clamp on the shorts and the bears who believe the market's going to crash every single day. They're done.
Frank,
And Paul, you're
can you
dead
pull the
right.
monthly candles? I think
And
he was talking about.
this is the weekly chart, and it's looking pretty damn good. Okay, this is big, and this just shows, like what I showed before on the S&P 500, that we could go to 332. This market's going to shock the living daylights. It's already doing that, shock and awe. Yes, there'll be little pullbacks during the day here and there, and just going to ramp higher if these things continue. And right now, something big is about to happen. This yellow line, which is the 5-week moving average, is about to kiss and go higher over this red line known as the 50-week moving average. And when this type of crap happens, it is called a confluence of lines. You don't need to be a rocket scientist to figure out 1, 34, 50, the 5. What if this does that? You know where we're going to be? I'll show you where we're going to be. We're going to be way up here. And it can happen. Boeing alone, as I said, can take us there. If Boeing just goes up, and my Boeing charts are all there on my Twitter feed, on the thing. If Boeing alone on the daily goes and fills this gap at 241, which I believe it will, from 205, the markets will be up 1,000 points in the Dow Jones Industrial Average in the month of June. Did you guys hear me? So instead of like trying to figure out whether you're buying $10 or $30, like, I know Kenny kind of like didn't, he's new, so he didn't, I know what he was saying once he explained it, and got me out of my confused stage. The thing is that Boeing alone can take this market a crap load higher. So let me ask you one quick question. And Kenny, I appreciate your participation. Have you ever bought Boeing calls?
Yes, I did. I made money off it too.
Nice. Get into Boeing and sit with it. Okay. Get into Boeing and sit with it. That's it. You don't have to worry about it. And Rita, if it works, then Rita's going to be our best girlfriend ever you ever met. All right. Riata. No, I'm dead serious. It's a complete spec play. You'd be like, honey, I'm going to, you're married, right?
Yeah, it was Friday until it went sell.
Stop talking about the same thing over and over again. If Riata works, you're going to name your wife Riata again. You're going to say, honey, can I name you Riata? So, no, listen, I know it does that. I agree with you. And it's very frustrating. So you're learning how the game works. And it's very frustrating. I understand what you're saying. Like, it's there. Why aren't they taking it, right?
Yeah.
And then, yeah, exactly. I know exactly what you mean, brother. So Boeing, yeah.
One more before we go. ANTM.
Anthem. Always liked Anthem. It's a good looking chart. It's still a very good looking chart. Okay, on the swing chart. This is still a a bull flag. You can see that, right? The problem with ANTM is that it is hospitals, and the hospitals seem to be a little bit stuck over the short term over the movements, they're going through. So this is again a swing. This is a stock that can wake up around $19. We have done that many times, and I'm trying to clean this thing here. Come on, not clean drawing set. 1 second, guys. Anthem. Hospitals are waiting for the fourth stimulus bill that's coming out, and they have a lot of money built in them. They'll certainly run on that. There's no question about it. So let me just show you. Okay. So when you look at from a, let's say we didn't worry about ANTM on a daily basis, and we as traders we always worry about things on a daily basis. Let's face facts. So bottom line is, if we didn't worry about that, this is certainly beautiful. This is known as a inverse head and shoulder with a low of 260, high of around 285. It's a cup and a handle. These things work beautifully as long as one has patience. That's what it looks like right now. The range is obviously wide, 20 points, but it hasn't been down 20 points like that since early May. At this point, the stock needs to break out over 300. And at that point, you're going to see the stock at 320. In the meantime, it's just going to basically kind of like, it's something you want to buy at least a month out or 2 weeks out. Sometimes I buy a week out because these things really move. Short-term picture looks like this. Just like that. That's your short-term picture. Look at the swings. So if you bought it down here at 280, it's at 289, $9 doesn't do a hell of a lot for me. I'd like the stock to break out over 300. I think it's going to happen as the economy is reopening, hospitals reopen, so they can charge the big money for the big surgeries and all that stuff. The real money comes from. So I like the stock. I think it's good to go. Is it a really like a heavy day trading stock? Yeah, many times it has been, but lately it's been kind of flat. It's moving between 297 and 280. So it is basically a 19-point range. So that's my answer to it. You can certainly trade it, but like I said, I would rather be a swing trader on this and just not try to trade it intraday. All right, I'm out of here. You guys have been great. Thanks for the excitement. Wow, it's 12:20. Where's the party? Where's my drinks, man? This is amazing. We kept going today, but a lot of great questions, a lot of great new members. God bless you all. Let's attack the week strong. Futures are up about 850 right now. So the last look before bedtime is this. This is your 1 hour chart, so looking like a bull flag. This is your daily chart on the actual live creature called the stock market. Right there. I still think a pullback can happen very quickly. The faster it happens, the better, as long as we don't break the 3100, 33. But I'll be obviously updating you guys. So, was helpful or not tonight?
Very good. Hey, Frank, it's Ed. Thank you for the 1 month.
Outstanding.
Any time, guys. Listen, we're real people. We're all in the same boat. I like to remind everybody. I'm no like friggin' genius. Yes, I read the markets better than most of you guys. That's why you guys are with me. But we're not like other trading services like, oh, that's it, I'm it. I have a secret method. Yeah, I understand the markets better. I don't have a secret method. I explain a lot of things to you guys. It's open book, transparency. All right? So, like I say, heck with all the services. They have this secret method. We read the markets in a very technical way. I give you a lot of fundamental, informational, educational knowledge on how things really work from the Wall Street standpoint, as well as the US standpoint, economic standpoint. And I'm sure these things will be invaluable to you as you guys go forward. On that note, we get a lot of referrals. Let's move on. Let's have a great week, guys. God bless you all. Thank you.
Thank you, you too, Frank.
Thank you, guys.